Hi, and welcome back to the Envision Home at Last video series. The other day I had a discussion with Tim Mueller, who's part of our business development team here at Blenker, and we discussed financing. So I want to share that information with you. In the end, if you have any additional questions or concerns, visit us on our website at envisionhomeatlast.com. We're here today with Tim Mueller. He's part of our outside sales staff at Blenker, but has a really good background in finance. Tim, can you help us out with this?
Sure. What do we got?
Today I want to talk to you about what customers can expect for both the pre-approval process and for the construction loan. So let's start with pre-approval. What can customers do to prepare for that?
Initially, what they need to do is they got some homework to do. So they need to get a credit bureau of their own. They can go on to freecreditreport.com, annual credit report. They're allowed to get one a year. Go and make sure there's nothing on the credit bureau that doesn't belong to you, that could be bringing your score down. Make sure the information is correct. In 15 years in lending, I've seen a lot of things on credit bureaus, so they should make sure that all that information is correct. Don't go around and apply at every bank and have people pull a bunch of credit bureaus on you, because that could affect your score and bring it down, which is, the score is a major factor in getting a pre-approval. Lastly, gather up all the documentation you think the bank is going to need.
Such as?
You got 12 months bank statements, you could have 2 years income taxes, other assets, all the information that would show that you're a better credit risk to the bank. It would make the approval easier, get rid of a lot of headaches up front and ahead of time, and then just be realistic. They should be realistic about their budget and where they want their payments to be. They should really know where they are comfortable. When you do have that mortgage for the next 30 years, you want to make sure you're comfortable with that payment and the price range that you want to be in for the house that you want to build.
Okay, and the advantage of that now is the homeowner can take that number to their builder and design a house that meets their needs within that budget.
Right.
Okay,
right.
So let's assume that gets done. Now, I would assume you're back at the bank with all that information. What happens next?
Well, they would order an appraisal from an appraiser, a local appraiser that knows that market. Usually takes maybe 2 to 4 weeks, depending on everything else they've got going on. They set up the construction loan. They will open an escrow account at a title company, and they manage the funds. So they would manage the draw schedule, and the draw is through each stage of the construction process. The title company would issue money out to the builder as they complete each stage. And then the buyer would usually make an interest-only payment based on the balance that's carried at that time. And hopefully they can get into a situation where, and I think a real common product out there right now is a construction to permanent loan. So you need to roll that over from a build construction loan, where it's interest-only payments, to something that's a permanent conventional mortgage. So usually 15, 30 years are 2 common terms for those, and that's the end loan to be set up on that conventional mortgage. Everything's done.
Okay, so that pretty much covers the finance process from start to finish with construction, correct?
Yep.
Great. Thanks, Tim. That's what we needed.
You're welcome.
Well, there you have it. There's some information regarding financing when considering your new home construction. I hope you find this information helpful. If you have any additional questions or concerns, visit us on our website, envisionhomeatlast.com. See you next time.